Thank you. So very warm and good evening to all of you. It's a pleasure to be here with all of you and want to thank you for taking time to attend this very important virtual panel discussion which we have today. I'm extremely delighted to welcome you all in this virtual discussion on notification which is issued on 3rd of May under the PMLA 2002 Act is making a buzz since the day it came out. We'll be discussing on this today. We'll try to understand the interpretation of this notification with our experts which will join today. Firstly, I would like to extend a special welcome to our Honorable President, Sri Aniket Sunil Talati ji, and our Honorable Vice President, Sri Ranjit Agarwal ji, for your presence and sparing your valuable time and for this very important discussion which we have for the members across India. Sir, your presence means a lot to us and we are honored to have you here. Sir, as we all know that the role of chartered accountant has changed as compared where chartered accountants were restricted to accounting, auditing and taxation. And now they are actually getting expert and has knowledge in various fields, including laws, strategic management, information technology, and economics. The committee actually, sir, is making a lot of efforts to update this knowledge to the chartered accountant and encourage them to develop their skill set in commercial laws, economic advisory, NPOs, and cooperatives. Also very happy to have an expert panel today, which we have, sir. None other than our Honorable Past President, C. Amarjit Chopra, sir. Expert in PMLA, Uday Kulkarni ji. Again, Rajesh Sanghvi ji. All of you, sir, thank you so much for your time, sparing your time, valuable time, in fact, for this important notification discussion, which we'll have today for the members. We also have with us my Vice Chairman of this committee, CA Mangesh Kinere from Mumbai, and CA Piyush Chhadir, who's also part of this very important committee of economic advisory, commercial laws, NPOs, and cooperatives. Coming back to the topic which we have been discussing today, it may be reiterated here that the prevention of money laundering is a need of an hour for development of Indian economy. And therefore, CAs are providing various professional services in this area with respect to consultancy, appearance before regulators, due diligence under the PMLA, etc. With this notification, which has come on 3rd of May, the ambit of PMLA is widened, making professional CAs, CS, CMS reporting entity for certain specified transactions, financial transactions, which is carried on behalf of the client. Of course, we'll have a detailed discussion that we have today. I think, but without wasting much time, we have our Honorable Vice President here, Honorable President Sir here. So I would, before I request President Sir, I would request our Honorable Vice President for his initial opening remarks and give his views, comments on this 3rd May notification, which is actually creating a buzz across the entire country among members, for which we have initiated this webinar on a panel discussion. Over to you, Sir, Vice President, sir.
Thank you very much, Chairman and Vice Chairman of this very important committee, Abhay Chhadir, Mangesh Kinre. My leader and our leader and very young technocrat, very thought-provoking leader, our President of ICIC, Aniket Talati, our past President, Amarjit Ji Chopra. We have our two very eminent panelists, Uday Kulkarni ji and Rajesh Sanghvi, Piyush Chhadir, our another council colleague, and all the very respected viewers of this webinar. I welcome all of you, and it's very, very important that this committee just coming this circular of PMLA and decided to have an outreach program for the benefit of the various stakeholders, including our CA member. Friends, this the growth of the country is evident across the globe. The way India is growing, its GDP, its growth rate, and other parameters like we are a youngest population and the kind of this per capita income we are having. So all aspects, the manufacturing sector, capex, all these things, the growth is there. And when the growth is there, the opportunity for professionals are also increasing. And when the opportunity for professionals are increasing, the responsibility are also likely to be remain on this note. And if you see this money laundering or PMLA circular, you might be aware that there is a task force, financial action task force set up in 1989 and has a signatory of 200 countries, which deals with how to curb the practices of money laundering, terrorist financing, and the financing should not be a weapon of the mass destruction. So this is the financial action task force working since last so many years, 1989. And India, the outlook of the India, how the money laundering and terrorist financing happening in India, the first review of India was done in June 2010. And now in November 2023, again the second review is due. So a country like India, which is going to or which is committed to being a developed country in 2047, the kind of global best practices, the stringent norms. If you want to be a developed country, the stringent norms has to be followed in India if you want to grow ahead. And on that pretext, this circular is there. But as far as membership is concerned, I would like to remind you, we have the council has come out with a guideline, January 2017, know your client, KYC. And 2.5 page this guideline is there, where the history of the clients, the various particulars of the client, the format is given by the ICI, and that guideline says this paper should be the first working paper file of any audit you are carrying on. So the audit working paper file, that paper on that guideline should be the part and parcel. January 2017, Institute come out with that. Then the new code of ethics, we have come out with the documentation. Now, this new code of ethics, which has come out 2019, every chapter contains a paragraph which says about how you are doing the documentation. This documentation criteria talk about the history of the client, what are the accounting and accounting standards applicable to that client, how you have carried out your audit procedure, what query you have raised to the client, what are the response you have received from the client, and what professional judgment you have taken after receiving the response of the client. All these things have to be documented properly in the audit working paper file. That is the requirement of documentation in new code of ethics. Then you might be aware of the 5 kinds of threats. There is a self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. So all these things are already part of our code of ethics. And one more issue you might be aware, we have NOCLA. In 2019, in new code of ethics, the institute has come out with a NOCLA. Already we have SA 250. SA 250 already from 1/4/2009. In addition to that, NOCLA, non-compliance of other laws and regulations, has been brought by the ICI in 2019. Because of the COVID, this 2 year we have deferred it. But the last year, from 1st October 2022, this NOCLAR has been made applicable to the practicing member doing the audit of listed company having 250 crore and more net worth. And moreover, this NOCLAR talks about fraud, corruption, and bribery, money laundering, terrorist financing, insider trading, banking and other financial fraud services, data protection, tax and pension liability, environmental protection, public health and safety. These are some of the issues which have been discussed in the NOCLAR. And moreover, this NOCLAR is equally applicable to the member in industry also who are in the senior position. So not only this NOCLAR applicable to member in practice, but member in industry also. So all these guidelines and guidance already given by the ICI since last so many years, and continuously the institute is taking effort to upgrade and update our member so that they can be more compliant while discharging their duty and responsibility. Having said that, this new circular has come, and I'm happy that this committee has come out with a detailed roadmap, the threadbare discussion with the very experienced our senior past president and two very eminent specialists, how to deal with this new circular, what more responsibility we have, how we can protect ourselves by having a proper audit working paper file, documentation, our role and duty. So I think this webinar will be a guiding force and give a roadmap to our practicing member so that they can discharge their duty in a more cohesive and more diligent way while discharging their duty and responsibility. With these words, I once again compliment both the chairman, vice chairman for coming out with this very innovative webinar for the benefit of the members. Thank you very much.
Abhayji, you're on mute.
Yeah, thank you, Vice President, sir. I think truly your experience, your knowledge of wisdom, and I think what the information you have shared among all the participants members with respect to the more compliance which is now required, the documentation which is the key for, I think it was actually the key, and like you said, January 2017, the Know Your Client was already implemented for the for specific area of audit administration function, but was part in the code of ethics. And like you rightly mentioned, it is more a compliance, a documentation would be actually the key to deal with all such notifications which are issued. So thank you so much, Vice President, sir, for your words of wisdom. And I think like you began with when you said that the dynamic and young leader which we have today, our Honorable President, sir, for this very important notification, which is there on 3rd of May, with his experience, I would say vast experience, and we've been discussing for a few days. And thank you so much, President, sir, for being here. And I would really request your words of wisdom and your inputs on this very important notification of 3rd May. Thank you.
Thank you very much. The chairman of this committee, Abhay Chajarji, the committee which looks after these economic laws and NPOs, the Vice Chairman Mangesh Kinnareji, the Honorable Vice President of the Institute, Sri Ranjit Agarwalji, I think who shared some very important aspects of why this has come in terms of the background and also what Institute has been doing over the past 1 decade in terms of the KYC as well as the changes in the Code of Ethics. Very respected past President of the Institute, I think somebody who's understanding not just the domain from practice side, but also has a vast experience working with the government, being in the NFRA right now and also in its pre-version chairing NACAS. So, sir, your views and your perspective will be extremely important. Thank you very much for joining. And of course, to the two faculties, Rajesh ji and Uday ji, who I've had the pleasure of working in the past on different occasions. My colleague in the council, Piyush Chajarji, and all the participants of this very important, I would say, webinar which the committee is organizing. Let me begin by complimenting and congratulating this committee, Abhayji and Mangeshji, both of you, for at the very right time organizing this interaction and coming up with the 3 expert faculties to discuss on what are the proposed changes that the notification of 3rd May brings into. And I'm sure while you delve into this, there's also another notification which came out yesterday, dated 9th of May, which also will be taken up. And I'm sure with the vast experience that all of you have, you'll be able to take this up, though it has only come out yesterday. But my compliments, not just because of the speed at which you've organized this, but also understanding. And here I speak to the membership at large, the kind of anxiety that each one of us you will have, especially at looking at the notification that was shared so widely across social media and then eventually even print and electronic media reported on it. And as the president, as the council members, we all understand that there can be a lot of anxiety around what is it. And here, therefore, I would like to just pause and say one thing, that it is important for all of us, remembering that we are professionals, to understand the perspective of any change that comes in. Because what one saw during the aftermath of the issuance of this notification was that, yes, on the WhatsApp University, as we like to call it, a lot of WhatsApp were being forwarded, PMLA under for Chartered Accountants, CSCS Company Secretary under ED. Now, if one has to pursue this notification of 3rd of May, It was effectively in terms of the subclause 6, clause SA of subsection 1 of section 2 of the PMLA Act. Simple as that. Where in terms of certain classes of transaction which are done by the relevant person on behalf of his client, and these are 5 transactions which have been specified, they have been included for the purpose as an activity for the purpose of this subsection. There was no amendment to say that tomorrow ED has been instructed that in every case you must go and inquire with chartered accountants or other professionals who have been mentioned in this notification, and that there is going to be a huge investigation on every chartered accountant. I think I'm trying to put the perspective, and having said that, understanding the anxiety when people saw when this was circulated in the WhatsApp and on other social media. I think we as professionals have to understand what is the context and what is the impact. In terms of the context, I will not repeat what the Vice President said, but FATF, a very important review which happens of the country. I can, for layman terms, say that it is like a credit review which happens, or a credit rating of every individual or a company is done. Similarly, a country has to be reviewed and a peer review happens. And we are all aware, our neighborhood, there are countries which have been grey listed and blacklisted. And when that happens, there is severe shortage of funds. Access of international funds to those countries gets restricted. And therefore, FATF is a very important commitment that India has an obligation to. And when FATF review is happening this year, there were certain changes that are being made to the Money Laundering Act. It is not just this change, cryptocurrencies, various other changes have also been notified under the Act to make sure that the entire ecosystem and especially the law is providing. And I'm sure all the members who are listening and tuning in today, none of us can subscribe and would want a day that India can even be considered to be grey listed, or any one of us is even thought of being involved in money laundering or terrorist financing, because that would be the last activity that as professional chartered accountants one would get into. Understanding also the implication of this reporting obligation. I think what has been done here, and I'm sure the experts, when they dwell upon it, will be discussed, is that there is a reporting obligation that has been cast upon as chartered accountants. And here it is in terms of certain transactions which are carried out on behalf of the client. In fact, many of these are not permitted for chartered accountants because of the Chartered Accountants Act and the extant regulations which are there under, and even the code of ethics which prohibit us from doing it. So it is not that today certain things have not been allowed for us as members to do. It was prohibited from the beginning. I think what has happened, and here, pardon me for saying it, but for some social media craze and some people for wanting to be the first one to post or report or comment on certain things, I think people said, oh, because of China companies which were incorporated, this has come. For XYZ reason, this has come. I think we have to be very clear and understand. We have a committee in the institute which is led by Abhayji and Mangesh Kindreji. They have been actively engaged, not just in this year, but even in the previous year. The committee in its earlier year was engaging with the revenue, with other departments for the FATF review. And therefore, these changes, we have to understand the context of the FATF review and why this is coming to place. Having said that, I will also say that we have to understand that as chartered accountants, and especially in this social media age, and at the cost of understanding that I may be trolled for this, and people may say, oh, you are comparing it very lightly. There are reporting obligations, for example, under the tax audit that we have, where you have to say whether there are certain transactions that your client has done, whether these are excessive, whether this is correct or not. We are anyways reporting on it. It is not that reporting obligation per se itself is coming for the first time to chartered accountants. But I would think that before we look at commenting on the obligations, we have to first try and understand. That is why these experts will help us do it, of what are these possible reporting obligations going to be in terms of the membership. I would only request that times are changing. All of us as a profession, as a country, have to understand that the expectations and the requirements keep changing. 2010 is when the institute brought about KYC. We already had the quality control standards, but it was understood by the council. In just a year before that, FRN, we always used to give firm registration numbers, but a unique identity which each firm had to itself was made compulsory to each firm to be attached along with the report and mentioned in the audit report. Subsequently, we came out with UDIN. Today, the institute is going with its own KYC in the form of Know Your Members, because this has been mandated due to regulatory changes and, of course, certain legal jurisprudence which has come out. And therefore, I would try and, first of all, tell the entire membership that let's all understand today is the opportunity, and I once again compliment the committee to have experts to tell us what is going to be the reporting obligation. And let me assure you, as the president and vice president, the entire council, that we are extremely concerned that if any unnecessary action is being taken on the members, or if there are occasions where you feel that this is being misused, I would request and suggest that please reach out to the council, please reach out to all of us, because we are here as a regulator, but also to ensure that our membership understands its reporting obligations, and that also the other side, which is investigation agencies, or it may be the government at large, also understand the perspective and the role that the professional play in managing the affairs, in advising your clients, or even for that matter, getting into incorporation activities and certifying certain forms. Mind you, the forms themselves require at certain places for professionals to certify them. And therefore, the inherent role of chartered accountants is imbibed in these forms and the rules which are there under the Companies Act. Having said that, I once again would like to repeat that it's important that all the members who are hearing this very important conversation and the question answers which will follow understand the perspective, also understand that it is institute which is always going to be there to understand and threadbare discuss the changes. And if there are any questions, challenges that you see, please reach out to us, because the institute will always try and ensure that yes, we are a partner in nation building, but we are also the voice of the chartered accountancy profession and our members in practice who are also doing a wonderful human service for the country. I always say this, if there are 15 lakh companies and so many new incorporations happening, so many new GSTs registrations happening or GST returns happening, if GST collection for the previous month was highest in the history of India, or if the direct tax and indirect collection has moved from 11 lakh crores to 33 lakh crores in a matter of 7 years, there is some chartered accountant who's burning the midnight oil. There is one chartered accountant who's helping his client understand the tax compliances. There is a chartered accountant who's generating the challans and encouraging his clients to pay taxes. And that is a very important role that we as chartered accountants play. And I'm confident that we will continue to play this role. Let us all try and understand these changes in the right spirit. And also, like I said, if there are any suggestions, any challenges that you foresee, please write to us. And it will be our endeavor to make sure that the membership at large is very well understood of these changes. Thank you very much once again to Chairman, Vice Chairman for giving me the opportunity, and my best wishes to the entire audience. Thank you.
Thank you. Thank you so much. And I think it's always a pleasure listening, sir. And thank you for your words of wisdom and the encouragement which everybody gets when you speak. And to add, I think what you rightly mentioned, that being in important professionals for the country as partners in nation building, we have been performing and are fulfilling our duties, responsibilities to the expectation of the government, and we'll still continue to do that. And I think, like you said, leaders like you, Ranjit Bhai, and of course our honorable past president, wherever the suggestions which are received from any fellow members, any member across the country, will ensure from the committee, from ICI, they are well responded, so that every member has no doubt about it, that what is this notification, why this notification, what is the intention behind it. And of course, nothing better than we have these eminent and learned personality which we have today, who have so much experience in this field, so that every doubt which has been raised in past for last 1 week has been answered, every question has been attended. And even then, after that, if we still have any such points or any questions which are still left to be unattended, I'm sure from the committee, we'll make sure that the response is given to them well on time. So thank you very much, President Sir, Vice President Sir, for your valuable time and coming to this webinar and addressing the members across the India. And we'll begin with, as per your convenience, sir, you let us know whenever, or you can leave as per your convenience, please. And to begin with, the first reading, it may seem to be a regulation to all professionals, but at a final reading, only professionals who are carrying out, like President Sir said, specified financial transactions on behalf of their clients are covered as a reporting entity. I think it is most important that we talk about only those specified transactions, financial transactions, which are carried out on behalf of their client. I think we'll have a detailed discussion on each such points with our eminent and learned personality. Of course, Amarjit Chopra, sir, the past president, needs no introduction. But, sir, once again, thank you so much for sparing your valuable time and being here for this discussion, a panel discussion as an expert. Your views, your interpretation always helps the member to understand any such notification, any such clarification, whether it is audit, whether it is Ind AS, essays, or of course PMLA now today, and you're here with all of us to explain, the basic understanding of this notification. We have CA Udalik Kulkarni. Sir, thank you once again for being here, a practicing chartered accountant with experience of 27 years, a CISA, a certified internal auditor, and carrying out forensic accounting, fraud investigations, IBC advisories, and data privacy audits. So, and second, also, sir, thank you so much, Rajesh Sangviji, who's here with us and is always available for any such event of this committee as a faculty, and has experience of 34 years and vast experience, I would say, in PMLA, Benami laws, PMLA, SFIO, FEMA, and I think the list goes on. So thank you very much, Rajesh Bhai, for being here. And I think would request every member, participant member, if there are any questions, they can send to us in a chat box, which is already there. We'll list down those questions and we'll try to cover those questions at the end. I would certainly request Mangesh Bhai that we can list down those questions, and if the time permits, we can take up those questions at the end, because we have already listed down a few points, questions which we'd like to ask to the panelists. And I think we'll take up those first. And of course, another circular notification which is issued yesterday, we would also request our panelists to highlight some of the important points which are covered in this notification, if time permits. Today, that will be a request from the committee. So, Mangesh Bhai, over to you. I think we can begin with our, with the panelists, and we would request you to take up this webinar forward. Thank you very much, all the experts, panelists, for being here. Piyush Bhai, Mangesh Bhai, and every participant who is here for being here for this very important discussion today. Thank you.
Thank you, Chairman. First of all, I welcome again, and after the brief introduction of the subject and the introductory remark of Chairman as well as the Vice President and President, what we are going to do for next hour and so is we have designed from committee certain questions, and we are requesting these faculties to throw light on that, on those questions, because as Vice President Sir and President Sir mentioned, that we must understand the perspective and the fallouts of this, rather than simply getting worried and without knowing anything. Because as it is, PMLA is not something which every chartered accountant, by virtue of profession, is looking into it. Although the committee, for the benefit of members, let me tell you that the committee runs a full-fledged certificate course on PMLA laws. And the faculties over here are in fact the faculties for that that course also, to make ourselves well versed with that law, as well as there are certain professional opportunities. In fact, we'll talk about that also. So let me straight away start with the questions, and these questions have been compiled by the committee to set the tone right, or set the perspective right. Let me ask first Udayji, if you can explain the exact perspective or intricacies of the Prevention of Money Laundering Act. For example, what is the money laundering? What is a money laundering offense? Who is covered under PMLA? We can just start with that, so that at least members will have understanding of the background of this PMLA law very quickly.
Okay. Good evening, all the participants, and I would like to thank this committee and the President Sir and the Vice President Sir, and of course the Sajid Bhai and Mangesh Bhai for arranging this webinar so as to get the clarification and whatever is going up into the social media that needs to be clarified from our side. Yes, Mangesh Bhai, to answer your question, I would like to say that the Money Laundering Act, PMLA, which we talk about, Prevention of Money Laundering Act, I look at this law from the two perspectives. So there are two parts of this law, I can say. One part is, of course, dealing with what is money laundering as an offense. So that first part is totally driven about because that is a criminal offense, so it is having all those provisions related to that offenses, investigation, powers, jurisdiction, and all that thing. So that is the first part of the Money Laundering Act. And the second part of this act, which I am looking up to, is that obligation of the reporting entities. So right now, this notification has come for the second part. As far as the first part of the money laundering offenses is concerned, that is applicable to every Indian. It's not like that because of this notification that money laundering offenses related to something has been notified. It's not like that. So already that act has enacted in 2005. So since that, whatever be the offenses are there under the money laundering things, so those are applicable to every citizen, irrespective of whether he is a chartered accountant or non-chartered accountant, whether he is in any type of the business or whatever his professional or the business activities or employment related activities. So that is not something which is coming out of this notification, that is already enacted in 2005. So to have the clarity about what is money laundering, so the section 3 of this act has defined what is an money laundering offenses, and the money laundering offenses is typically dealing with the proceeds of the crime. Okay, I will explain these terminologies, but we need to understand that because this whoever, it is not only the chartered accountants, but whoever is the person who is connected directly or indirectly, attempted, indulged in this related to the proceeds of crime. Money laundering is typically the case where the money or the property, I can say, even though it talks about money everywhere, it is dealing with property. So any property which is generated, derived from the illegal sources, and trying to convert that into the as a legitimate money, that thing which is dealt by this money laundering activities. So by committing certain offenses, if somebody is generating the property, okay, that is called as a proceeds of crime, and anybody is related to those activities, related to the concealment of those illegal sources, concealment of the possession, concealment of how that is going to be used, or in a way, somebody is involved in projecting that illegal source as a legal source. All that is treated as an offense of a money laundering, in a say, right? Then what is the proceeds of crime? That also needs to be understood, because proceeds of crime is a crux of all this money laundering activity. So what is proceeds of crime? So proceeds of crime, again, as I already told you, that it is a property which is derived by committing some criminal activities. So the base of this act or the base of this money laundering offenses is the criminal activity, and because of that criminal activities, you are generating certain property. Property could be of any type. So the act covers all the movable, immovable, tangible, intangible, all those types of the assets are covered as a part of this proceeds of crime. Now, how can we define the criminal activity? So that has also dealt with under this act. So the act has specified that if you have committed the scheduled offenses, that the name that is given under this act as a scheduled offenses. If somebody is doing the scheduled offenses, that is treated as a criminal activity, and because of the commitment of that schedule offenses, if you are generating any type of the property, that is a proceeds of crime. Now, what is schedule offenses? That has also been defined. So there are more than 25 laws which are mentioned in three parts, three schedules of this act. So that there is a schedule A, schedule B, and schedule C. So as I said, there are more than 25 acts. And which acts they are dealing with? So normally all the offenses which are under the IPC, Indian Penal Code, the SEBI Act, Section 1212A, or the Prevention of Corruption Act, or offenses under the Narcotic Drugs, offenses under the Wildlife Protection Act, the offenses under the Information Technology Act. So there is a list of more than 25 acts which is divided into the three parts, and most of them are Schedule A, and there are one or two acts in the part B. So the basic premise of this money laundering offenses is that if there be any commitment from any person, the schedule offenses, that is the basic premise. Because of that commitment of offenses under the schedule offenses, even the fraud under the Companies Act is also covered under that schedule offenses. Because of that, if any property is generated, that becomes the proceeds of crime, and anybody which is related with that the proceeds of crime, that may get involved into the money laundering offenses. That is the first part. This circular or this notification is dealing with the second part, that is related to the reporting entities. As far as the first part of the money laundering offenses is concerned, through the enactment of this act, it is applicable to every Indians. So that is the.
Thank you. Thank you. We will come to the second part, of course, but just wanted to set the tone right and understand exactly, because for the benefit of members, many of them or most of them might not have done this course or may not be, in fact, going in the detail of this act. That's why I wanted you to just specify. Basically, it is covering all the citizens. It is not that because of this notification that chartered accountants are covered under PMLA. Now, the talk has been, the vice president, president have been speaking about this FATF and all. Now, this perhaps may be new concept or new understanding to you, many of our members. So, Rajesh bhai, can you just explain what is FATF, what is this mutual evaluation, what's this international process is all about? I'm just requesting panelists that we have to cover many questions within an hour, so we can be very brief. And so that, and right now, I mean, as it is, I would appeal to all the audience also. If you really want to understand in detail about the professional opportunities also, there is a course which is going on. We are not here to understand the PMLA or that aspects in the complete detail. So Rajesh bhai, can you just throw light on what is FATF, what is this mutual evaluation all about, and what kind of obligations are there?
Thank you so much. Thank you so much, Honorable Central Council members and my fellow brothers. Now, FATF has been, as rightly addressed by the Honorable President, it is kind of, if I can use the word, kind of a credit rating for the entire country as far as how strong the financial systems, the reporting is there in the country from the money laundering perspective, counter financial terrorism perspective, any proliferation of terrorism. These are the critical areas. So in about the 1989 or so, the G7 countries formed this financial action task force countries. And the job was strengthening the systems, coming out with common guidelines and evaluations, etc. So today almost about 200 jurisdictions have joined together. Now all over the world, the FATF gives recommendations. कि आप ऐसे कीजिए, ऐसे कीजिए, ऐसे कीजिए. These are the kind of recommendations the FATF country gives. And if the FATF feels that a particular country is actually very poor in its monitoring, in its reporting of money laundering or terrorism, financial issues in terrorism. I'm not talking of the core terrorism, but terrorism needs finance also. So FATF gives these guidelines. About 40 recommendations have been given, and certain countries who are not following them or very poorly they are following, they're classified into, let's say, the blacklist, the gray list. Fortunately, India is not in any blacklist or gray list. So much of a regular monitoring is not required. But for example, countries like Myanmar, Iran, or Korea are, into the blacklist, and we also have the gray list. And that is why a lot of my fellow members who may be having exposure to the United Arab Emirates, Dubai, and all that, of late we find a lot of difficulties over there in opening bank accounts, etc. That is because UAE has been in the gray list. So countries want to come out from the gray list, blacklist, and they want to come out in, in the good books of FATF, because financially as a monitoring system, it's a very strong country. That is what they want to. And hence FATF does an evaluation, a mutual evaluation of all these countries and kinds of, gets them into this grading concept. So the mutual evaluation of India is slated for sometime in November 23, which could not happen because of the pandemic. And thereafter in 24, the FATF is going to have a plenary session, FATF plenary session. There's a paramount body in FATF. And Egmont, EGMONT, that's also a body which was formed in Egmont Castles in Belgium, that is also sharing information between the financial intelligence units all over the world. They share the information per se. Let's say it's part of the FATF. So India is going to be evaluated by FATF in November. It's critical for us, and therefore we should follow the recommendations. And their recommendations come as far as, strengthening up the financial reporting systems, especially by even the finance professionals and certain other professionals. So consequent to that, these recommendations just come in, and consequent to that, we have this particular notification also. So this is really important as far as the FATF India evaluation, which is slated in November 23. So that's the role of FATF and Egmont and the relevance to India.
Thank you, Rajesh Bhai. So now we have understood. I mean, we have at least touched upon what is a PMLA and FATF and how this correlation is going on. I am coming to Chopra ji now. Chopra ji has been always passionate about the profession and have led the profession and leading in the different perspective in terms of he had been on the disciplinary bench also, and now in NAFRA and all. So, sir, if we have to correlate this, what exactly is an intention? You feel that what can be a perspective of intention bringing behind bringing this kind of a notification, and does this notification really mean that now chartered accountants are covered, or earlier suppose chartered accountants were not covered in that, now they have been covered? What is your view about it, and what is you are having the actually nerves of the profession, so what is your feeling about it?
Thank you, Mangesh Bhai, and thanks to the chairman, Abhay, and of course the president, vice president in abstention, my two panelists for that matter, Karni Saab and Sanghvi Saab, and of course the participants who are there. I think the point which you have raised is very, very pertinent. What can be the intention? I think intention has already been given out. That is, the intention is very clear, that we need to prevent money laundering at all costs, whatever it may be, because any kind of money laundering actually weakens any economy. There's no doubt about it. And of course, as Sanghvi Saab said, that FATF evaluation is going to be there of the country, and whatever are the covenants of the FATF, those have to be complied with by the country. So far as your other question is concerned, let me say one thing very clearly. If anybody feels that we were excluded earlier, that's a misnomer. I think that has to be understood very clearly. Nobody was excluded from this. Nobody was excluded. The only pain, basically, when this notification of 3rd May, which has come in, is that when you talk of the FATF covers virtually every professional, and internationally the lawyers are also covered. Let me put it that way. I'm not getting into the debate why they should be covered, why they should not be covered. But I always maintain one thing from the core of my heart: there has to be a parity, there has to be an equality, and equality is even guaranteed by the Constitution for that matter. Why not? We should get an equality so far as that particular part is concerned. Whether it was service tax or whether it is GST, we have always been discriminated in one way or the other for that matter. But I will not get into that particular part. But I am very clear that if even a lawyer feels that he will get away with any of these activities, he may not be able to get away with it if he is found to be guilty under Prevention of Money Laundering Act. But being equated, I think you would agree with me, and Abhay would agree with me, and the two panelists would agree with me, to be equated with a real estate agent, to be equated with a jeweler, to be equated with someone else, that hurts somewhere or the other. If your names have been specifically brought in of your profession, it hurts as if we were guilty somewhere or the other. It is not that I oppose any this kind of a move, that if at all the money laundering has to be prevented, you undertake any kind of measures which have to be undertaken. But if as an individual or as a firm, chartered accountants were already covered, or company secretaries were already covered, or cost accountants were already covered, why our name should figure that way? That's the only hurt that I will like to say. So, to my mind, the government has the intention of controlling money laundering. There is no doubt about it. And they must go ahead with the money. But when it comes to parity, I think that parity has to be maintained, that equality. That's the point I would like to say. If you have any other query, you can shoot at me and I will like to answer that. I think I have answered your question in full.
Yes, sir. Yes, sir. In fact, you have nicely put it, the perspective of it. That's what I wanted to ask, that being only a chartered accountant or advisor to a person who is doing money laundering, we would have been otherwise also attracted to it. now there was
My-
no
my-
need of bringing.
My worry, Mangesh, is the 5 activities which have been covered there. Very frankly, in the 3rd March, 3rd May notification. No, I'm not too worried about formation, agent of the company and limited partnerships. I'm not bothered about basically, you can say the buying and selling of the properties. I'm not into that under any circumstance. But then there are certain cases which I will like to spell out later. We do handle, the client does believe in us and may say to us that you please handle my funds for the purpose of payment of the taxes. Shall we be covered for that also, and shall we be reporting that also? I think, and the other thing is, it's very well said, the KYC, etc. That also I will come a bit later.
I'll come to
But I am very clear on one particular point. Every government has the authority to frame the laws. There is no doubt about it. To prevent the money laundering and to make sure that the economic development is not hindered by any kind of such activities. But again, equality in law should be maintained.
Thank you, sir. Thank you for nicely putting it in a proper perspective. Udayji, Chopraji has also mentioned, and you also mentioned there's a second part of it. Perhaps the only change which has happened additionally is now we are being made a reporting entity. Now, exactly, who is this reporting entity? What kind of an obligations? President also referred to obligations of reporting entity. And what can be the consequences of non-compliance? Ultimately, we are all bothered about, we are all about concerned about that. So can you just throw light on that?
Yes. So, as I said in my opening answer, that the second part is always dealing with the reporting entity. Reporting entity is a mechanism which is established under this act, so that the economic intelligence, they can gather the information about the financial transactions. Okay, there are certain objectives behind that. And from that perspective, the profession or the business, whoever will be selected, those will be called as a reporting entity. Right. Yeah. So it's not like that only the chartered accountants are right now the reporting entities. Earlier, there are so many other businesses are there who are already covered as a reporting entities. So reporting entities are, as I said in a simple language, who will submit certain information to the government or central coordination. The name of that central coordinating agency, that is commonly known, that is FIU, Financial Intelligence Unit of India. So all these information, all these reporting activities needs to be done by the reporting entities. So to say that banking institutions or all the banks or the financial institutions or the intermediary or so many, even the registrars who is registering the documents under the Registration Act or the real estate agent, they are already classified as a reporting entity, right? So a reporting entity will submit certain information to this FIU. That is the basic theme behind the reporting entity, right? So because of this notification, I'm again repeating, for certain financial transaction restricted to these 5 activities, the CAs are now coming under the category of the reporting entity. Now, which are those obligations under this reporting entity? So basically, the first obligation is maintaining the records related to the identification of the customer, that is popularly known as an KYC, know your customer. Okay. So how to maintain the identification, what documents to be maintained, what records needs to be maintained. I think the ICI has already taken step about that. So that is now coming up with this requirement, and that is related to this financial transaction for these 5 activities, right? So KYC is one of the important, but in the KYC, one has to understand that there is also concept called understanding the beneficial ownership. Beneficial ownership is again that is defined whenever it is applicable only to the legal entities and not to the individual person. The legal entities having certain criteria, like say 25% of the share capital, 15% of the partnership capital or the profit sharing ratio. So there are well-defined criteria as per which the beneficial owners needs to be identified, and his or her KYC needs to be maintained along with the KYC of our customer. Right. So this is about the record related to the KYC maintenance. The second part is or the obligation right now, which is casted mostly on the banking and the financial institution, is to submit the various types of the reports. So reports are in the form of the cash transaction reports, then the suspicious transaction report, the non-profit organization related transaction report, the fake currency related report. So there are certain reports that needs to be submitted by these banks, by these financial institutions like that, right? So that is another requirement, or that is another obligation under which the reporting entities, whoever may be included, they may have to submit the report. But having said that, in the same under the same section 12.5, Rajesh bhai, can you please mute yourself? Yeah. So under the same act, under the same section of 12, subsection 5, there is a provision that the central government does have a power to exempt certain categories of the reporting entities from this reporting obligation. Right. So right now the notification has come. So in my opinion, the notification has talking about certain obligation, yes, but right now they have not specified any reports to be submitted. Perhaps let us hope for the positive way. Perhaps the government may come up with that exempted category may be applicable for the CS. That is my hope. And even though it's not like that, every transactions to be reported even as a suspicious transaction, it is not at all required. If there are certain criteria about how to identify the suspicious transaction, there are certain red flags, there are certain parameters, all those are well defined. So it is not like that each and every transaction of our customer is required to be reported as a suspicious transaction, not at all. And I think, Mangesh bhai, we need to impart a training about all those aspects. So nothing to worry about. As far as your third part of the question is concerned, consequences of the non-compliance. See, the reporting entity right now, I'm calling it as a chartered accountants who are dealing with this financial transaction. They may be required to submit the reports to the financial intelligence unit, director of the financial intelligence unit. Now, what will happen if the reports are not submitted? It's not like that tomorrow, if you are not submitted the report, the ED will approach you like that. It's nothing like that. Okay, certain powers are given to the directors. They may send you the notice, they will understand why you are not submitting the report, and there is only penal action. The most likely thing, worst likely thing I can say, is the penal action, and that is only of rupees 1 lakh, but that is in the extreme cases. It will not start like that. If you are not submitted the report, they will take an action immediately and they will make you make the payment of rupees 1 lakh. It's not like that. There are step-by-step approach. Even in the act they have taken, they will send you the notice, they will give you the opportunity, they will first give some instruction, and in the latter case, if you are frequently doing that kind of a default, then there could be the stringent action. But as I said, one good thing is that section 12.5 is having the government a sufficient power to exempt certain categories. Perhaps that may will also work it out in our favor. And as I said, not every transaction looked out as a suspicious transaction.
Sorry, I'll come to suspicious transaction later. But since you have touched upon the KYC and due diligence, Chopraji being in the disciplinary committee also, and he have ruled, given certain rulings also on that. Sir, can you just throw a practical light on the practicalities of KYCs or due diligence? Now, how the chartered accountants should go about it? As Udayji has mentioned about the beneficial ownership in the legal entities. So perhaps we are supposed to do it, but how we should go about it in future also about in this?
You see, Mangesh, one thing is, I can tell you few of the cases that we have done. Of course, it was not from the PMLA angle. These were from a very different angle, of course. But I think the principle would remain the same. If you have got a client, you have to go through the history of that. I think the Vice President has already talked about those issues that if somebody is a history sheeter for that particular matter, there have been many cases against him. I think that's one thing that you need to be very careful about that kind of a client. If you read the balance sheet of a particular person and in the notes, it's all coming before you accept the assignment. Because what we say is, even before you accept the assignment, You must know your client. Do the exercise full due diligence before actually accepting a client. If a particular client has been raided several number of times, I think you need to be careful about that kind of a person. If certain cases are going against him for money laundering already, if certain cases are going against him for Benami transactions and which have been duly reported, and I think one needs to be careful. But what I am trying to say is, there have been cases before the disciplinary committee where the chartered accountant did not visit even the premises of the client, ever. He had not seen even the promoter or the proprietor or the partner of the firms. He never met them. The financial statement used to come signed by them, and he will sign sitting in his office saying that the accountant brought the books of accounts. No, that's not desirable at all. When you are actually dealing with a particular client, you need to know that particular client physically also. It's not through the photograph only that you need to know him. Because I can tell you, when you deal with a particular client, sitting person to person, I think the behavior, the expressions on his face, I think many things can be read out. And even shaking hand is a very different kind of an art for that matter. Even saying namaste is a different kind of an art for that matter. So what we came across was there were people who never did it. What to talk of the due diligence? They never met even the promoter. They never met the partner. They never knew where the office is. That was the problem. And we got the complaints from somewhere that no office existed and the audit has been conducted. So we asked those questions from the gentleman. So what I am trying to say is that when you deal with a client, whatever service you are rendering, whether these are covered by these 5 services or not, that's not important. I think whatever nature of service you render, you need to meet him, basically. And another thing is that you, as a normal, even if I'm going to form a company, whosoever are the subscribers to that memorandum or articles of the association, I must have their Aadhaar cards, I must have their photographs, I must have the proof of their addresses for that particular matter. So what kind of business they are doing? I can tell you there have been cases wherein a person says that I will invest 1 crore of a rupee. And if you look at his bank account does not have even 150 rupees in his bank account. What kind of a due diligence is this? So when I am dealing with a particular client, I think I need to go behind him a little bit. And even if I have to explore by his name today, Google Baba is the best Baba. And if you go to the Google Baba and try to find out and search by his name, whether any of the cases are going against him, I think sometimes the Google Baba throws out that particular information to you. So my humble submission to all the members is that when this reporting exercise, now it has become a law. Let's be very clear. We have to live with it. We can only go to the FIU, we can go to the directors, we can go to the government and ask for certain exclusions, etc., etc. And we can ask for certain dilutions. But once it has become a law, it will be very difficult to get out of it. And when we are not able to get out of it, I think the proper KYC will be the answer to everything. Now, one of the things is that if I create money, it's a sort of an arranging the money. If I do a loan syndication for a particular client, I must have the full details of that particular client, what he has been doing in the past. And if it's 10 of the accounts have been already charged with something else, I think you need to be careful all about those.
Sir, so in short, what you are saying is it is already covered. We were already covered by this. Perhaps the mandatoriness only was for audit. But as it is in terms of our ethical requirement, we were already required to keep a due diligence and KYC of all the clients. Now, only thing is that it has come in the formal way and way of documentation. Am I right, sir? If I'm not wrong.
There is no doubt in my mind that we had to exercise that due diligence even earlier with regard to the client, because it's a part of my code of ethics. Even otherwise, even before accepting a client, I have to do the search for him, whether what kind of a character he has, basically, what kind of a client he is. So whether I will be held in default somewhere else tomorrow or not. So this was already there. The only thing is now having been brought under PMLA, now it's no more a case of negligence, etc. Let's be very clear about it. It is going to be far more than the negligence consequences.
Yeah.
So be very, very careful. That's all I will like to say to the workers.
Thank you, sir. Thank you for leading with this. Udayji, I'm just coming to you now. Coming to the exact wordings of notification, I'll come to Udayji and then Rajeshji also. There are two aspects of it. Basically, it talks about financial transaction carried out by the relevant person on behalf of his client in the course of the profession. Now, before I come to the types of transaction, what does this exactly mean? Financial transaction carried out by relevant person during the course of this profession.
Yes, this is actually the core part of this notification that needs to be understood by the CA professional. So it's not like that the transactions, because this notification is crystal clear. They have covered the 5 activities. I think we will discuss more about that 5 activities. But it is very clear that these must include the financial transaction. I'm only considering here the 3rd May notification, because the 9th May notification is a bit different. I'm not going to talk on about that notification.
That we'll talk later. Yeah.
Yeah. So that we'll talk later. So just I'm taking the views only about the notification of the 3rd May. So it is talking about the financial transaction, and of course the relevant person and all that thing that is mentioned here. So basically, it is in the course of his business related or profession related activities. It's not like that I'm going to do on my own. So suppose a chartered accountant who is going to sell his or her property, then also whether he is coming under that. So that's not the interpretation of that. So basically, we need to understand what is financial transaction. From the Money Laundering Act perspective, the financial transaction, a joint term has not been defined anywhere, okay, as a financial transaction. But the term transaction has been defined in the PMLA Maintenance of Records Rule 2005. So basically, but if you look at the nature of this or the activities covered in the definition of the transaction itself, so mostly those are dealt with the financial related transaction. Okay, so it includes the purchase and these are the normal activities which we mean whenever we are handling any of the financial transaction. We experience all these activities like purchase, sales, loan, diya hai, pledge activities, gift hai, transfer hai. All these activities are covered under the transaction, along with the deposit of the funds, withdrawal of the funds in whatever mode, not only in the cash mode, but even in the mode of electronic way or with the help of the checks like that. Okay. Then this transaction also includes the use of the safe deposit lockers and all that, and those services, of course, we are not going to offer, so no question about that. And it talks about important 2-3 things. It talks about any payment made or received as a part of a contractual or legal obligation. Okay. So there are 2 things which needs to be understood from this definition of the transaction. One, the normal transaction of purchase, sales, deposit, withdrawals, loan, gift transfer, all those are covered. In addition to that, we as a CA need to understand that whatever the payment, because it is a financial transaction, whatever is the payment made or received on behalf of the client to our account, because of our contractual nature of the assignment, or it is because of the legal obligation, but that too need to be understood with the restrictive view related to these 5 activities. So transactions are crystal clear, but these financial transaction needs to be understood with whatever the activities, 5 activities mentioned in this notification. So it does not mean that the transaction other than those 5 transactions are also covered under this notification. So that impression we need to remove from our mind.
Yeah, I mean, just understanding this in additional perspective about these 5 transactions. So, Rajesh, whether all the activities of CAs are covered, I suppose not. I mean, all this, you can just throw light on that. Whether all practicing chartered accountants will have to require and submit these reports. There's a lot of confusion in the mind of people regarding this. And just can you throw light, just adding to what Udayji has said on this?
Okay. So Udayji has properly analyzed this notification, which is running into three parts. And I would request all members, in fact, everybody would be having this notification to read this very finely. This notification is, according to me, made up of three parts. One is financial transaction carried out by CA, let's say, financial transaction carried out by CA on behalf of his client. That's point number one. Point number two, it should be in the course of his or business or profession. Okay. And point number three, it should be in relation to those five activities. In relation to, that is important. The word is very loosely worded. In relation means it is touching, tangent. Now, normally, what a majority of the chartered accountants in India are doing? One, income tax services, filing of returns, faceless assessments, appeals, tribunals. Okay. Two, GST related compliances, GST related representation services. Three, auditing services, whether tax audit, stat audit, or whatever it may be, various kinds of audits all over. Now, of course, chartered accountants have been an area of insolvency also, and maybe liquidators also, and maybe some may be executors also, and maybe some may be trustees also, and some may be independent directors also. And so the area has increased. Now to say, and before that, let me add one more thing. I'm sorry, I'm just cutting it, but I need to add one more thing. After this notification, which is making all of us thinking, I do expect, and I'm quite sure, that the FIU will come up with detailed guidelines. Just as 7th of March 2023 के दिन PMLA notification came for those service providers dealing in virtual digital asset to subsection 47A of Income Tax Act. Or 7th March को the notification came covering them also under reporting entities the way we are covered under reporting entities. और 10 मार्च 2023 के दिन उनके detailed guidelines also came up, and it was pretty exhaustive that what is virtual digital asset, आप KYC का maintain करोगे, आप reporting क्या करोगे, what is suspicious transaction, etc. It's a beautiful whatever 10-15 pager guidelines, and how you have to register as a reporting entity, etc. Everything has come up. So I'm quite sure they will not leave us only with this notification. I suppose in discussion with the institute, the government, and in consultation with Reserve Bank of India, I presume so, because that is a mandate of the law also. They will come up with detailed guidelines because chartered accountants are indulging in a lot of activities across the sphere. But prima facie, I once again stress on the five items only which are specified in the notification. I do not find a way of filing of returns coming under the ambit. I do not find a way of auditing coming under the ambit. I do not find a way of GST and related compliances coming under the ambit. But yes, now comes certain gray areas where we really have to think that is this or is this not coming? And even if it is coming, is this such a big kind of a stress to me that I have to make compliances? For example, financial transactions carried out by a chartered accountant on behalf of his client in the course of his business in relation to buying and selling of property. As everybody mentions, yes, we don't do buying and selling of property. But if chartered accountants have, and I suppose they should not, taken a power of attorney from a client and then they are indulging in transactions on behalf of the client, well, now that's a signal. We have to be very, very careful. One more transaction, managing of client money. Now, what would you mean by managing of client money? Typically, we as chartered accountants don't open a bank account and the client transfers 1 lakh, 2 lakh, 5 lakhs in the account, and then we are managing it by way of investing in stocks or mutual funds or government paper and all that. We're normally not doing that. But what if a chartered accountant is indulging in these activities on behalf of his client, having taken a written mandate from the client in the course of his or her profession? Well, that is a cause of concern. Similarly, any management of a bank account, supposing the chartered accountant has been given a mandate to manage a bank account and made a signatory over there, which I wouldn't see, but I'm just raising a point. So yes, these are areas of concern. So to answer your question specifically, are all the activities of the CA covered? No, friends. All the activities of a chartered accountant and majority of the activities, I would say, are absolutely not covered under this. And there may be certain activities which may on the borderline, which times will prove us, will tell us actually whether they're coming. For example, in the course of buying and selling of immovable property, as I've been discussing also informally with you, sir, buying and selling of immovable property, chartered accountants are helping clients or offering services to clients as professionals for deduction of TDS under 194IA or TDS compliances under 195. Those are certain areas where we are assisting them in these kind of maybe transactions or financial transactions. Similarly, perhaps even for payment of taxes. So these are areas which will have to be now be addressed by chartered accountants. But on the whole, I feel all the the major areas from where we get our bread and butter, those areas are not covered by this notification.
I'll come back to you, Rajesh bhai, regarding this some transactions which you mentioned. But before
Ji.
that, an interesting question I would like to pose to Chopra sir. Sir, involving in the financial transactions of client, and now just Rajesh bhai has mentioned that taking mandate or something. Do you feel that this is actually allowed under our code of ethics? No, should we take such kind of a mandate and do an activity kind of client, because we cannot engage in we cannot enter into other engagements. So just throw light on that, sir. Sir, you are on mute.
Before I answer that, Mangesh, let me say one thing. A good number of chartered accountants today who are dealing with the foreign clients, particularly the NRIs, are identifying the projects, are identifying the plots, are identifying something else, and maybe selling the properties even without power of attorney. The mails will prove it. I can tell you that. You may not say that there is a power of attorney, but the mails will be able to prove it. There will be enough of exchange basically between them, which says that I'm actually doing it for you. And I've identified a buyer. I have identified a seller. So one has to be on watch for these kind of transactions also. And particularly the mails will be very, very important. Let me be very clear on that particular ground. So far as the other part is concerned, you see, normally under the code of ethics, you cannot engage in any other business for that matter. Now, there could be chartered accountants. I will not rule out that possibility, who get the accounts opened on behalf of the clients and then operate those accounts and charge certain things for that, which is prohibited so far as the code of ethics is concerned. You can't do it. There is no way that you can do it. But if one is doing it, and if one can prove it, probably one is running into problems. To me, here, very frankly, one area which has been said by Sanghvi Saab already, the payment of taxes, which can bother me at times, because the clients do, particularly in Mufassil towns, these are the chartered accountants who carry out all these activities for their clients, basically, particularly the smaller towns. And so that's one activity. And then when I read the fourth activity, organization of contribution for the creation, operation, or management. Now, when I talk of organization of contributions, it can mean arrangement of funds also. And arrangement of funds can be in the form of the loans also, for that matter. So that would be allowed. So that is allowed under the code of ethics. You can't say that the syndication of loans is not allowed, or arranging the money is not allowed. There is no doubt. Now, percentage of money, whether you can charge it as a part of the percentage, I'm not getting into that particular detail. But definitely there are certain kind of services which you can render. There is no doubt about it. And acting as liquidators, it's already allowed. It's an exception already. So there are certain activities which are already allowed. You act as insolvency agents also. That is already allowed under the code of ethics for that matter. Yes, other activities deliberately cannot be undertaken by the chartered accountants, like buying and selling of the properties on behalf of the clients. But if this is proved through the mail that you have done it, I think you run into the problems. You are on mute, probably.
So the point which Rajesh bhai is saying is in relation to, perhaps maybe relevant in those activities.
Indeed.
Otherwise not. So Rajesh bhai, I'm just coming back to you. Sorry, I just went to Chopra ji to tackle about this code of ethics issue, because he's been master in that. No, talk is about this suspicious transaction, reporting of suspicious transactions. Now, can you just give example of these 5 activities? What can be the suspicious transactions in these 5 activities, perhaps?
Okay, so to answer your question, the first thing is that one should read what is the definition of suspicious transaction under the PMLA rules. It is given over there, but I wouldn't go into the academic knowledge of that. All the members can really go into that, because it is more of a subjective viewpoint, because they use a language in the section that, any transaction which is giving rise to reasonable ground of suspicion and an unusual or unjustified complexity, or there is no economic rationale, उन्होंने इन सब बातों को suspicious transaction में डाला है, means for bankers and for FIs and for intermediaries and all that. Now, for a practicing chartered accountant, let's say like me, yes, clients do ask, at times about buying and selling of property, what is my capital gain calculations, etc. I have to remit the money abroad, 15 CACP bharna hai. These are very common things which are coming in SME chartered accountant firms. And it's in relation to buying and selling of immovable property. Now, friends, to mention suspicious transaction in these kind of scenarios, let me try to present one possibility. Now, I'm open. It's a subjective. It's a possibility. I'm open to discussion. Please don't catch my words. But supposing there is a gift taking place of an immovable property from A to B, taking into account 56 to 10, then there is further cross gifting going on from B to A, and thereafter, let's say both these transactions are both these properties are being sold away, and when these properties are being sold away, there is a gross violation of 50C happening over there. And let's say immediately after the sale of these properties, whatever money is coming in, again there is a cross gifting going of those funds, and perhaps let me add to the complication, thereafter the funds are being remitted abroad to unknown persons and not their family members, and 15 CACB are following. अब देखिए मैंने एक स्ट्रक्चर ड्रॉ कर लिया है, क्रॉस गिफ्टिंग, selling at below 50C. I suppose the audience is knowing 50C and all of that. Again, cross gifting perhaps taking place, then the money being remitted abroad, unrelated persons को भेजा जा रहा है. And to add to all of this, these are not the routine transactions being done by this kind of a client. Client छोटा सा low profile client है, 2, 5, 8, 10 lakh रुपए income declare कर रहा है, and suddenly we are finding this transaction of a few crores running past through his bank account. Now, of course, I come to the notification which says that financial transaction carried out by the chartered accountant on behalf of his client. But I'm leaving that particular aspect. Your specific question, Mangesh ji, was कि हम suspicious transaction को क्या उदाहरण दे सकते हैं? What can we give? Now, friends, you draw up the entire picture on the canvas. When you draw up, as a practicing chartered accountant, if you feel this seems to be suspicious, I'm not able to connect the dots, what is happening over here, perhaps that is where some amount of suspicion may come. Let me take example number 2. Formation of a company. Now, normally chartered accountants may be forming, and even company secretaries form companies. Both the professions are respectable. But visualize a situation where there is a company formation from a particular address. Take any XYZ address, 112 Mahatma Gandhi Road, Nasik. Take some address, some imaginary address. And from that very address, you may be having more than, let me dramatize it, more than 25, 30 companies being formed over there from that very address. And you find all these companies are strange names: Crocodile Enterprises Private Limited, Peacock Enterprises Private Limited, something strange. Look at the main object clause, something appearing to be similar. Now, this is the due diligence being done, and you find similarity and some common elements and common threads flowing into all of these, all being opened in the same bank account perhaps in future. These are only giving rise to some suspicions कि क्या ये shell companies तो नहीं बन रही है, etc, etc. So to answer your question, Mangesh ji, that one cannot have a very definite guideline of what may be a suspicious transaction, but in the facts and circumstances of each case, we will have to apply our intellectual capacities, perhaps, if I can say, a little bit of intuitions also, economic, rational, bona fides of a transaction, unusual or unjustified complexity, and then arrive at a conclusion that is this sounding or smelling of some suspicion, yes or no, and then take corrective action.
And if I'm not wrong, if there is a suspicious transaction, then only we have to report. Am I right?
As far as reporting is concerned, sorry.
Yeah, sorry.
As far as reporting is concerned, and the formats and the time durations के 15th or the next month को आपको STR means suspicious transactions report करना है या क्या report करना है, I'm quite sure the guidelines of FIU will come up on that, yes, and that's how we'll have to. Yes.
Yes, we are receiving a lot of questions, but as a committee, we have designed first of all some questions. Let us complete that, and some of those questions we are covering. In fact, one question has come about confidentiality. In fact, sir, I would like to ask Chopra sir to you. Now we have a confidentiality clause in our code of ethics. In fact, there is a clause also in the second schedule, part 1. Now, if I disclose as a chartered accountant anything suspicious which I feel report to the FIU, will it violate my clause of this clause of code of ethics? Can I disclose this information of client without informing him? Because clause says that if he has a permission or if it is permitted under law, you can do it. So whether this has to be communicated to him or I can report it.
Mangesh, I think our code is very, very clear. Of course, when I define even an ethical person or ethical professional, one of the major things is that he has to maintain the confidentiality of the client. Under no circumstances it should be leaked. We have held people guilty, even in employment for that matter, when they have leaked the information of the employer to their competitors for that matter. Now, the point is that our code of conduct says very clearly that if it is required under law or it is required by the courts, you can still report it. Now, if PMLA says that it has to be reported, it is under the law. So can you say that you will not report it? I don't think that you need to communicate in that particular case because it is a part of the law. That's the way I look at it. Yes, as a matter of abundant caution, you still want to tell him that, boss, this is a suspicious transaction to my mind, and I'm going to report it because this is to be reported under PMLA, provided this falls under the ambit of that suspicious transaction. That's very, very important. You should not report every transaction which you feel to be suspicious. It should be suspicious in nature for that matter. So I think that's very, very important. But to me, there is no bar for me if it is required by the law or if certain court requires me to, if the court summons me, can I say, no, I will not appear? They will hold me in contempt for that particular matter. So to my mind, confidentiality is one part. Now, I can well argue on the other side also. And I will definitely like to have the views of Kulkarni Sahab and Sanghvi Sahab. My code is also under the Act. If you look at the schedules are a part of the Act, Chartered Accountant Act. Now, PMLA is also an Act. Now, which Act overrides which? That may be difficult for me to define, very frankly. But I will not like to take panga with the PMLA under any circumstances as a professional. I will like to tell my client very clearly. I can communicate very easily that this is a transaction which I have to report under PMLA. I just send him a letter. Even if he objects, I can go ahead. I don't mind.
So, sir, according to you, in fact, by this notification, now it is very clear to us that it is required by law. So I can report it now.
It is required by law. And if I have to err, I will like to err on the right side of it rather than on the wrong side of it.
And does
the right side is the PMLA. And the right side is the PMLA. If I have to report it, very frankly. And this is going to trouble people, particularly in the real estate cases.
Yeah.
And even in certain jewelry cases, even in certain export cases for that matter. I can count on my fingertips today what kind of transactions may have to be reported in the times to come, if you ask me.
Yeah. Of course, that clarity will come. According to you, it is better to record at least our suspicion in our documentation.
Yeah. May I just add over there, Mangesh ji?
Yeah, Rajesh bhai.
Chopra साहब ने जो बताया, there is a specific section 71 in PMLA Act, which is actually mentioning, that the provisions of this act shall have effect notwithstanding anything inconsistent contained in any other law for the time being enforced. This is a latter provision of the act. I mean, this is a 2002 act notified in 2005. And as far as I'm concerned, that is the earlier one. But there is this provision in the PMLA Act, sir, 71. And I suppose the courts will... Ji, sir.
So good. I mean, we are heading towards, Udayji, now these records have to be maintained now. The very important is regarding KYC record, due diligence, suspicious transaction. And Chopraji also mentioned that better to document that I have observed this suspicious transaction because of this. Now, for how many years I should maintain this record as per PMLA? And, after submitted, suppose I'm reporting it on the suspicious transaction, whether there is a possibility of they calling me again for, discussion or any further reporting.
Yeah. So before answering that, I would like to answer the concerns of Amarjit ji. Here, first thing is that it is not binding on the chartered accountants to communicate with our client that I have submitted a report, something like that. It's not binding, and actually it should not be done. Okay, so there is no onerous on the chartered accountant कि भाई जाओ client को कहो कि मैंने report submit किया है. Actually, it should not be done. Second aspect, as far as any confidential information, if it is required to be submitted as a suspicious nature or otherwise as a requirement of the reporting aspect, then there is a protection given under this law. If you go to section 14, the section 14 talks about that there is a protection and there is no civil or criminal proceedings can be taken against after submission of that report. So there are two safeguards itself are given in that. Now coming back to your question, for how many years the records needs to be preserved. So for every transaction, the periodicity is specified as a 5 years. For every transaction, we need to understand that we need to keep the record of all these transactions for a period of 5 years. And suppose even after the closing the relationship with the client, suppose some client is leaving us or is not going to opt in our services, from that date also for the next 5 years, the records needs to be kept. So it is within, I say, from in tune with the other laws, because normally we may keep that record for 8 to 10 years. So if there is nothing, the period is compared to that is very shorter. It's 5 years. And as far as your second question, second part of the questions, whether the agencies, I mean FIU will call back again and again for an inquiry. So to my mind, if the detailed procedures about reporting, how it should be done, what could be the how the access will be given to the FIU portals, because that will be needs to be submitted in an electronic way. So there will be the detailed guidelines, and if we comply with those guidelines, and we have to not physically we have to submit the details, but we may have to submit the details to the FIU portals, and there is that is well routine. I mean, in other sectors. So not to worry about that processes. Only thing is that whatever be the guidelines which will come up for our guidances, we will have to make a compliances, and according to that we will have to submit the information. If there would be some concerns, if certain information will not get clarified to that agencies, FI will definitely ask for certain records, or they will ask for certain additional information. But if we make a compliance of these detailed guidelines, I think we don't have to worry about that. There will be a frequency of they will call us for any inquiry or like that.
Thank you, sir. Rajesh, you just mentioned about certain activities, additional activities you feel that in relation to may be covered because of that. Now, would it come to accounting? Because real estate, in relation to that real estate, whether I'm handling finances, accounting, say special purpose audits, due diligence reports, or routine compliances, or tax payments, whether it will be covered in this.
Yeah. Mangeshji, now this is the $1,000,000 question. And the list of services can be really enormous, pan India, the kind of services chartered accountants are entering. Now, I'm not on the code of conduct and the ethics part, because yes, at times it's possible that whether can a chartered accountant do this or not do this. But as far as the reporting entity in PML is concerned, the fact that this a chartered accountant can do or cannot do is not of any relevance as far as a reporting entity is concerned, because for them this is an independent act for which they expect compliances. Now, to answer a question, chartered accountants, if they are offering just accounting, bookkeeping services, once again, whatever the services they're offering, we need to read it with reference to this particular notification. So the question I posed to myself, chartered accountants rendering bookkeeping services to his client. Is it a financial transaction carried out by the CA on behalf of his client on a professional basis in relation to buying, selling of property, on managing of client money, or management of bank, etc.? Personally, I feel that just maintaining bookkeeping or just doing bookkeeping of a client is not typically any activity in relation to buying and selling of movable property, or even in relation to managing of client money, because bookkeeping is a different act and managing a client money is something much more serious and involving act, or even the management of a bank account, etc., etc. auditing and services like that attestation, personally, I don't feel it is coming under the ambit of financial transaction covering these particular five things which have been mentioned in the notification. Because time and again, if a question is coming up, whether this activity attracts or whether that activity attracts, we have to come back to this notification, read the three parts and touch it. So prima facie, I feel.
Rajesh, just I disturb, it is basically in relation to RERA audit. RERA audit, whether it will come. Audit generally won't come. That's fair.
Okay, that's a very interesting question. Now, as far as a RERA audit is concerned, I am personally of the opinion that it is not a financial transaction carried out by the chartered accountant on behalf of his client. There may be buying and selling of movable property which the builder client is doing. I can understand, which may be his business or maybe a capital asset, whatever. But to really put it in the category that a RERA auditor is doing a financial transaction on behalf of his builder client in the course of his property, though it may be the RERA audit is in relation to buying and selling movable property. No, I think so. That would be a far-fetched conclusion being drawn out of this. So personally, my opinion, I may be wrong, but that's my personal opinion. I don't feel that that falls into this particular category. Similarly, even about the routine compliances under income tax and TDS and other issues, but rather than putting the question in this way that whether these defined services are coming under, I would like to touch upon what may be the services that are coming under these five categories. That is a little bit more critical, and that is why few moments back when I just mentioned the chartered accountants taking any mandates or power of attorneys from their clients, please be careful as far as buying and selling of properties and managing, etc. Chartered accountants being signatories on bank accounts, please be careful because that is somewhere falling into these kind of activities. But sheer bookkeeping or sheer auditing or sheer special purpose audits or maybe just due diligence reporting and maybe income tax returns filing or maybe TDS filing, etc., may not just come into this. However, I repeat, a little bit gray area for which I'm throwing myself open to discussion is the 194 IA, the 195 TDS, sometimes 15 CACV related to buying and selling of mobile property and when the money is going abroad. If at all, that has to be seen on a case-to-case basis. We cannot generalize on that thing, and that is why I would love to wait for the FIU guidelines to come so that we are very, very clear on this. And my answer also stems from one more point. Friends, reading the section is one part, but we should also understand the genesis, why this notification. So we have to go back to FATF and all those kind of things. So what does FIU want from you as chartered accountants? Basically, the FI is wanting from you flags about possible suspicious transactions through any of these five different modes. That's what they're wanting from us. And that is the core and that is the genesis. Let's keep that in our mind. And if that is achieved, I suppose the objective of the notification is achieved. So with all due respect, friends, just playing about with the words that, okay, this is a financial transaction, but it is not in relation to so and so. We will wait for the guidelines to come. But on the whole, I feel, friends, that just application of a PAN number or application of a TAN number or profession tax or a trademark or things like that may not come under the ambit of this notification. We have to time and again come and see whether it touches these things very clearly and specifically.
Thank you, Rajesh Bhai. Chopra ji, I know you have to go by 7. Can you just spare 5-10 minutes more if it is possible? Yeah, we'll be concluding shortly. There's one question I will ask Udayji and then I will come back to you, Chopra ji. Udayji, there's an interesting question. Now, the practicing chartered accountant, it has come. Now, there are chartered accountants who are having a corporate form of practice. They have formed companies which is allowed under our code of ethics as a corporate form of practice. So whether that also will be covered in this?
Yes, very good question, because many of the chartered accountants might be thinking right now on that line. So we should have a clarity about that also. So if you analyze the definition of the relevant person, which is there in this notification, so it is talking about the chartered accountants practicing individually or through a firm. So these are the two criteria right now they have mentioned. So either you are practicing as an individual or you are practicing through the firm. And they have made it clear what is the meaning of the firm. So they have referred the Income Tax Act definition, and we all know what is the definition under the Income Tax Act. So the partnership firm as per the Partnership Act, or it could be the LLPs, right? So these either you are practicing individually or you are practicing in a partnership mode, either is a LLP mode. So those are covered under this act. Okay, as far as the relevant person is concerned. Now your question whether the corporate type of the practice will be covered. So my personal opinion, by analyzing this definition of the relevant person, right now I can say no. But I will take one rider here. If you look at our ICI Council guidelines for the practice in the corporate form, we have defined about certain things. So the first thing we have defined in that council guideline is about the managing director, whole-time director, manager, etc., etc. And for that, one of the important criteria which we have said there, that managing director, whole-time director, or manager shall be a practitioner, proprietor, or partner in a chartered accountant firm. So the corporate managing director or the whole-time director, the criteria requires that he should be a practicing chartered accountant in any of the way. So in the firm or even if he's individually practicing, for those things, the notification is applicable over 3rd May. Now, for other role as a managing director or a whole-time director, perhaps the notification of the 3rd May will not be applicable. Then the larger notification of the 9th May, that will come into the picture, and I will just cross my fingers there because that will open the larger path.
Yeah, that's why I wanted presence of Chopraji, because 9th May notification, I'll deal with that. But before coming to 9th May notification, sir, just overall view now, we have covered this 3rd May notification. Do the professional, do the chartered accountant really need to worry about this 3rd May notification, and what precautions can be taken? Just sum up so that we can go to the 9th May notification. And there are some questions, but sir, I know you have to begin. I'll ask those questions to the other two faculties.
Mangesh, it will be wrong to say that the chartered accountants need not worry about it. I think the chartered accountants will have to worry because it's another burden on them to the extent that another reporting exercise has started. Now, if I look at these 4 areas, I'm not too worried, very, very frankly, if you ask me 5 areas, except 1 or 2. But then, if your mails are actually being exchanged, which are contrary to the spirit of the entire PMLA, then you need to worry about it. Let's be very clear about it. And the other thing that one will like to say is that we are already regulated, over-regulated, or over-regulated. I don't want to get into that particular question right now. But the fact is, I have been gathering audit evidence. I've been documenting. So I'm in habit of doing it. Let's be very clear about it. So if I carry out certain other transactions under PMLA, which require me to report, then I will be doing it. My only humble advice to the institute or to you, the committee, Abhay, is that somewhere or the other, we have to go to FIU, we have to go talk to the government and talk for the exclusions, basically. What is excluded? Like Rajeshji was telling with regard to the accounting services or auditing services. Auditing services already have many things to be said in the report itself. If you look at the CARO with regard to the Benami transactions, even for that matter. You look at section 143.12, which talks of frauds to be reported, even the fraud which are likely to be perpetrated, those are to be reported. So already that care has been taken so far as the audit part is concerned. But tomorrow it should not happen that during the course of audit, if I come up with a real suspicious transaction, which may not be a fraud, but it can be a suspicious transaction from the PMLA angle, then what do I need to do? I think that's one thing. So one should say that so far as auditing is concerned, during the course of audit, if you come across anything, whatever is to be reported, that is in the audit report format. That does go to the FIU. I think that's the way I look at it. And so far as these bank transactions, etc., are concerned, that is something that we need to be very, very clear about. My worry is now, more worry is the 9th May circular, if you ask me, yesterday's circular. Because it talks of, I'm opening up that Pandora box basically.
Yeah, you can start.
Before I leave. Because it says that if you provide a registered office, business address, it happens. At times the client says, okay, I need a particular address, and you give that address. It is happening. I will not say that it does not happen. So today you are falling into that particular trap. So please do away with that. But there is an exclusion also, that if you have done under tenancy, there is a proper lease agreement, and that whatever is the rent that is subjected to deduction of tax at source, in that particular case you will not be trapped under that particular provision. But one will have to be extraordinarily careful. And then chartered accountants are in habit of acting as trustees. Now, if you now act as trustee on behalf of someone, I think you can run into problems. That's again covered in the 9th May circular so far as that part is concerned. A number of us, including myself, we are acting as directors. Now, I think this is one area where the FIU will have to stipulate or very clearly say what kind of transactions they require the directors to report, particularly the independent directors to report. No, very frankly, independent director does not get into the day-to-day activity at all. Whether they are trying to cover the whole-time directors or they are trying to cover even the independent directors. No, independent director it only goes for the meetings basically. And if you want to cover him there, I think it's expecting too much from the independent directors in that particular case. Now it covers the secretary of the company also. I don't want to comment upon that. It talks of the partner of a firm also. And then it talks of acting as formation agent of companies and limited liability partnership. We know people formed companies and sold it as shell companies, which Rajesh ji or Uday ji, I think, talked of. Now, that's going to be one of the areas of concern. And we need to be on the watch so far as those areas are concerned. To me, so far as the first circular is concerned, out of those 5 activities, maybe hardly one activity I may be covered. So far as the yesterday circular is concerned, I think it is of great consequence because many of us will be acting as directors also. There, probably the committee or the institute should talk to the FIU as to what kind of transactions will have to be reported by the directors. And directors individually, they don't have the wherewithal or they don't have the office even to develop those formats and then to report those transactions for that matter. So that is where I will like to end. I am a born optimist for that matter. Let me put it that way. I have my own concerns, which I have expressed. But at the same time, I will say that one need not be over concerned with these things. Because if I am carrying out my profession in a dignified, ethical manner, probably not much damage can be done to me. But yes, if I am on a borderline somewhere, I will like to err on the right side of it rather than on the wrong side of it. That I am very clear in my mind today. Government is not going to leave me. I think government is very clear so far as this particular PMLA part is concerned, and they have their task cut out so far as prevention of money laundering is concerned. Thank you very much, Mangesh and Abhay Bhai.
Sir, just one thing. That 9th May circular, now your worry regarding the equity, perhaps there is equity in that 9th May circular, and it has covered everyone, not only chartered accountants, because for the benefit of audience.
Lawyers are still not covered. Lawyers are still not covered because lawyers are there in the exclusion there. Lawyers are not there in the inclusion. Let's be very clear about it. Lawyers are still to be covered. So, but I don't want to stretch this point beyond a particular level for that matter. And thanks to Piyush also, thanks to you. Thank you, sir. Thank you. Very frankly.
You have to leave.
Sorry, I said that I have to leave at 7. So thank you very much.
Thank you, sir. We have some 2-3 questions. We'll cover that. Thank you very much for your there.
Thank you. Thank you for your presence.
Thank you.
There is one more interesting question, and then I'll come to the 9th May circular, your view on that. There's one question which has come, because there are many questions which have come, but I think we have covered most of them. or certain things are not relevant. Somebody is asking about whether my audit will be covered, what I have done audit and all those things. So we are not taking that, but definitely my appeal to the audience is you can write to the committee so that we can take it in the right perspective and we can deal with that. But a very interesting question has come that if suppose I'm dealing with the, say, buying and selling or whatever financing activity, right? I have done all the due diligence, but there is certain transaction which the client has taken off balance sheet or off books of account, which later on comes to notice of the ED or some kind of this thing, whether I'll be held responsible. These were not there in the books of accounts or due diligence. Now, anyone, Rajesh bhai or Uday ji, on this? Yeah.
Okay.
Rajesh bhai.
Uday ji, I'll take it. Then you can add to it.
Sure.
Point number one, as Udayji mentioned in the beginning, that this is only a reporting requirement. It is
Yeah.
not anything to do with the main crux of the PMLA Act, that is Section 3, because that is applicable for any and everybody in this country, anyone outside as such. So it is only a reporting requirement. Point number one. These reporting requirements are there for banks and for financial institutions and for so many other entities. Now, supposing you're hit with the provisions of this circular, this notification, okay, and you do your due diligence, you have your documents, okay, and you're preserving them also, that's okay, and you're reporting them also, and that's also okay, and you're saying that perhaps there is no STR, there's no suspicious transaction, financial transaction, that's also okay, and something turns up in future. The way I've seen is that as far as your responsibility of reporting it to the best of your ability, keeping in mind what is the definition of suspicion, and you have done it with all the due diligence in a bona fide way, the story stops over there. God forbid something turning out later on. It's not that by default the reporting entity is going to be crucified, because if that is going to be the logic, then I would say most of the financial frauds which have happened in this country have been routed through the bank. So by default, I would say today all the banks would have been penalized under PMLA. But what happens is that the FIU, if they find that the reporting is not correct, not done properly, or there is laxity also shown in that, then they will either give a warning, or they may tell you, follow these directions, or they may tell you, give us these reports at these kind of intervals, or worse come to us, they issue a SCN show cause notice, they'll give you a hearing, and they may levy a penalty minimum 10,000, maximum per lakh for every default. So that is what happens. But that does not mean that the concerned chartered accountant will be raided by an ED department, or there'll be a survey under Section 16 of PMLA, or there'll be a search under Section 17 of PMLA, or search of person. No, those survey and search sections are qua offense under PMLA. And here we are not talking of that. We are only talking of a scenario where there was a due diligence. I did it to the best of my ability. In spite of that, something has happened. That does not mean that the chartered accountant can be crucified being a reporting entity. So that's what I feel in my humble submission. Udayji.
Yeah. Mangesh and Rajesh ji, actually, I was expecting this question. Right. Because these questions are running into the professional side, and there is nothing wrong because it's naturally going to happen after reading the circular. So I was expecting. You are rightly said all the things, Rajesh ji, but I would suppose I would like to guide to the members that to ask some question for testing whether this is coming within my scope. So first thing, whether you are whether you are dealing with the client and the client is handling all this financial transaction, basically the financial transaction. Let's say they are giving you the certain amount of funds and then you are transferring these funds, or you are dealing with these funds in any other way for buying and selling of immovable property or any other thing. The question was rated that it is off the balance sheet. Now, one care I would suggest I should or all the professional needs to take care of that, because one gray area in this definition of the transaction is the fiduciary relationship, right? So the transaction includes the fiduciary relationship. Now, whoever has put that question, so my question to him is that whether the client has told you that these are the amount which is off balance sheet, that may come under the fiduciary relationship. And I think for that, Rajesh Bhai has given the clear answer that in that case also, okay, you have to test whether it is a suspicious transaction whether you are keeping all the records and all these things. And then, as I said, there could be the guidelines about identification of this suspicious transaction. And as per that, even if you report or not report, you have to maintain the documentation. So logically, you have to, if you are reporting, you don't have to worry about that. Even if you are not reporting, you have to maintain a documentation by why you are not reporting. Okay. And if you are able to keep that documentation, and whenever there will be a question from the FI why you are not reporting, I think Rajesh Bhai has clearly mentioned that there will be no stringent action कि ED हमारे घर पे आ जाएगी, ऑफिस पे आ जाएगी, ऐसा कुछ नहीं होगा. But only thing is that they will ask you, and if you demonstrate with certain documentation why you are reported, why you are not reported, that's the end of the matter.
Thank you. Just to conclude, I think we were to conclude, but Chopra ji had to leave. That's why he remarked on this yesterday's circular. Yesterday notification in detail is covering many activities. So quick comments of both of you on yesterday's notifications. After that, we will conclude. I'll hand it over to Chairman. Quick comments on yesterday's circular.
Okay, so in my personal opinion, in this, not mentioning the name chartered accountants anywhere, but it is covering, almost the whole gamut of people who are carrying out any activities on behalf of, in the course of business on behalf of, and they mention over their formation. And the second sentence is a little bit worrisome to me. What Chopra Sahab also mentioned, and I read from the notification, the secretary of a company, that is also okay, independent director, partner of a firm or a similar position and limited liability. Now, firms is an entity and limited liability is an entity which is prevalent en masse in India. I mean, the SMEs are typically in a partnership form or an LLP kind of format. Company formats, I can understand those who can afford the due diligence and then the compliances. But partnership firms are rampant all over the country and include and limited liability. And the second thing is these are, I wouldn't say areas of concern, but they're also being pulled up into this because of FATF evaluations. And of course, point number 3 over there, providing a registered office address. Thank God in India, do not just give our addresses for any kind of company formation, as against similar professions in foreign countries very often who offer these kind of services, may not be for rental purposes, but fortunately in India we don't do it, but chartered accountants need to be careful on that particular front also. So 2-3 things over here in this particular notation, in this notification of 9th May, I wouldn't say a cause of concern, but they are bringing a larger gamut of people under reporting entities. And once you're a reporting entity, whatever we have just discussed applies to them also. Of course, for this 9th May notification, what applies to them, they have to read the notification. Only those things will be applying to them. But once again, sum and substance, FIU guidelines will be the ultimate. They'll be clarificatory. They will actually tell us what you have to do, what is not expected, in how much time, what are the format, what are the actual formats, Excel formats, hai, PDFs, hai, digital signs attached karna, etc. They'll be telling us, and accordingly we'll be reporting maybe monthly or quarterly, whatever it may be.
Udayji, your quick comments. In fact, just adding one thing, whether this 9th May circular added one more professional opportunity also.
Exactly. So we need to look from that aspect also. So we have to help all these who have covered under this. So directors have covered. I'm looking at from that. कि मुझे कितने client मिल जाएंगे. Right. So it is an opportunity for me as well. So it is covering larger. You can say the larger stakeholders, not just the chartered accountants. And we don't have to, again, I say, the over worry about that, because see, although I can say that they have covered the larger stakeholders here, at the same time, it is a challenging for the FIU also, because I have given one example, or Rajesh Bhai just mentioned about the partners. Now, how can one partner, suppose one partner may report one transaction as a suspicious, the other partner may not report that as a suspicious. Okay, something like that is going to happen. So, casting a responsibility on an individual basis like this, that is going to be a challenge for the implementation. But as I say, we don't have to over concern about that, and everybody is telling right that. And actually, Mangesh Bhai has rightly you have said the tone that look at the 9th May circular. Of course, if required, we may take a separate webinar like that, so that not only to the chartered accountants, but that could be useful for the other stakeholders as well. So we will get the things clarified, and till that time, I hope the guidelines from the FIU and others that may also be crystal clear. So that is what is expecting. The 9th May, larger coverage, yes, but not to over worry. Look at it from the opportunity side.
Thank you, thank you. In fact, as you said, on 9th May circular, our chairman Abhayji is also chairman of Financial and Tax Literacy Drive. So in fact, we may have to carry out from Institute the Financial and Tax Literacy Drive for this 9th May circular.
Right.
There are certain more questions, but as I said, those are indirectly covered, or some of them are not concerning in this circular. Some of them are concerning regarding PMLA. So that we can tackle later on in a PMLA session separately. So I hand it over now to our chairman, Abhay Shajetji.
Thank you so much, Mangesh bhai. And I think excellent discussion, very vital, questions which you have taken in this 3rd May circular. And I think I would say most or all the points which we from the committee thought that this notification would have. More particularly, I think Rajesh bhai specifically mentioned with that 2 sentence, financial transactions on behalf of the client, of course, for those specified transaction and in relation to these 5 items. So I think there we'll have to be more, I would think, to be careful in those 5 transactions where more due diligence, compliance, KYC, all needs to be done. Of course, as a member in practice, we are already doing it, but I think now we'll have to be more vigilant and more compliant and ensure that documentation is complete with all respect. So I think I sincerely, appreciate the time of Uday bhai and Rajesh bhai, and of course Chopra ji in absentia. And we also have, our member of the committee, very important member, I would say, who's also again an expert, and in the income tax, CFU Chajir from Mumbai, who is also a Central Council colleague with us. So I would just request him for his concluding remarks and a sincere vote of thanks to all the panelists and the participants. Thank you. Over to you.
Thank you very much, Chairman sir. Abhay bhai, Vice Chairman Mangesh ji, faculty for the day, Uday ji, Rajesh ji. It was really a wonderful session. In fact, I joined this session to actually understand the notifications, because since last week whole, you are receiving so many calls that what will happen. No doubt, the way I understood is definitely there would be some additional reporting responsibility which will come upon the chartered accountants. And therefore, they will have to be more serious as far as documentation is concerned. And the majority of them, chartered accountants who are these small and medium enterprises, the documentation has been always a challenge, unlike the before. So even if you are issuing a certification, if you are keeping the KYC norms, I think so the documentation would be a bigger challenge. And I know I've seen Rajesh bhai also arguing the matters on PMLA. And all the time, the documentation evidence has been the important role being played. So for reporting requirements will be definitely increased. And I would also take a clue from what Chopra sir said, that the person, if he is actually the 3 pillars of our institute being ethics and integrity, and if you are actually practicing with all ethical practices and integrity, then I think so nobody has to worry about this notification. Maybe it's 3rd May, 9th May, or it may be another 16th May, something coming up new. So there may, or FIU guidelines, we really need not worry. So the 3 pillars are very important of our institute, which is ethics, integrity. We need to follow those 2 pillars definitely. Then there is nothing to worry. There may be some additional reporting requirement, but as Mangesh bhai said, if there's an additional reporting requirement for us, then it is for our clients also, possibly for directors. So we'll get work also and we'll make money out of it. So it's a very nice, and it was a wonderful session. I think so. In fact, my doubts have been clear. That's what was the purpose of this session. And I know there were 2 wonderful panelists. Very much thank you very much to you, Uday ji and Rajesh ji, for spending your time and in such a short time. And even explaining the provisions of 9th May, which actually people have not yet been able to digest, but you have been able to throw light, because we are on 10th today. And hardly you would have gone in half a day to understand and analyze that. That shows your expertise in the subject. In absentia, Chopra sir, obviously, it's always enlightening to listen to him, because he is also aware of our overall issues with which the practicing chartered accountants are going on. And therefore, it was very wonderful. My thank to my chairman and vice chairman for giving me this opportunity and having this wonderful session in such a short time period. I'm sure the committee is doing a great job. Thank you very much. And in absence, I would fail in my duty if I do not thank my president and vice president who had addressed this in this time.
Absolutely,
Thank you very
yes.
much. And all the participants who have joined this, I'm sure you are more enlightened and you have got a good thought process to go back home. Thank you very much.
And Piyush bhai, the office, the secretary and the
yes,
yeah.
definitely. I am again
Officer,
apologize
great
to my office for not thanking them.
Yes.
Without them, it's not possible to move ahead.
Absolutely.
And my personal thanks to all of them, whosoever has joined.
Yeah. Yes.
And office.
Thank you.
Thank you all.
Thank you
Thanks
very
a
much.
lot.
Thank you.
Bhai.
Thank you.
Thank you, everyone.
We are closing
for
the
joining.
session.
Thank you,
With
Rajesh
your
bhai.
permission.
Thank you.
Uday bhai.
Thank you so much.
Thank you, Mangesh bhai.
Thank you.
Thank you.